I made $75,000 in the past 20 days trading SPY. And before we get into the how specifically, FY for proof anyway, this is my actual account, an individual account with digits in here ending in 582 or beginning in 582. So if we go to my screenshots I have here, this is inside of my actual Charles Schwab account, ending in 582 with an individual account and my profits of 75K. So if we go back over here, do this, and then same thing as individual count. And this was just one day from a trading perspective, 25K a profit. And again, it's from doing an extremely simplistic, very almost, dare I say, boring strategy, honestly. So if we go back, let me show you this step by step. This that you're looking at is the daily chart, which means every candle here represents one single day when it comes to the market. FY, if you had to guess, what does the market typically do on an annual basis? What is What is that basically? Does it usually go up or usually go down annually? Typically, it goes up. So with that being said, from a statistical big brain perspective, if you buy calls typically on a market that's going on an uptrend, it's pretty hard to be wrong, right? So, and that's before we even get into a strategy, right? So, as an example, the past 10 days, this is currently today, this is the day before when it broke towards all new time highs, etc. The past 10 days is from here, all green, finally some red, red, and then back to green over here anyway. And I mean, the fact that this is red doesn't matter because it's still massively up, right? So, most of these days have been up. So, technically, if you would have bought anywhere, you would have made money. And if I zoom out really quickly, by the way, trends happen for quite some time. This is an all uptrend here. Yeah, some downtrend. But FY, it was uptrending from here, 8.5, all the way over to 8.26. So almost, it's literally almost like if you just bought a call, you would have made money. And that's if you went back and looked and you only noticed over here at 8.14 and you finally said, you know what, I see that's going up. I can make money here. That's fine. Anyway, besides that, let's get into from a visual deeper dive from a day trading perspective. What do these days, these past 10 days specifically, actually look like? How did I make the $75,000? How exactly did I make 25K in a single day? How exactly do I only work 3, 4-ish days, I guess, on a regular basis per month and make that kind of money? Boringly. Let me show you. Go to the charts tab. This is the first day. So if I go back, this is this day over here when things started turning around to go back to the upside. The market opened up over here on the left hand side at about 544-ish. It went up, and then check out this interesting pattern that I discovered that happens so overly frequently possible, that it just prints money basically. It shot down, being that it had massive amount of red candles, right? On the 5-minute chart for SPY specifically, ran down. After the rundown, it finally got a couple candles that were green back to back to back, showing that it's no longer, right. Before it was low, high, lower, low, high, low. There's no more high, there's no more lower, low. Clearly, it's turning around. Boom, it turned around. There you go. There's your call, essentially. And I'm not talking about my supply and demand strategy because you can pinpoint where exactly this bounced off of. Not talking about that. Just visually keep this pattern in mind because this is day one. If we go to day two, you will see something very interesting. Day two is this on the 5-minute chart. Ran down a little bit, nothing crazy. Ran down massively, a whole bunch of red candles back to back, and oh my God, it just somehow just started running up again. Because typically a lot of stocks dip before they just start rising up. Just kind of is what it is. Now, that's only 2 out of the 10. Understandable. No way it can happen 3 times in a row. Third time is not the charm race. You're an insane person. Oh my God. Wait a second. Let me zoom back in. It shot down and the damn thing went up. How the hell is that possible? I mean, look, we're at 3 days, right? We're over here. That's what the daily chart looked like. You see these big old wicks here? It went down and then went back up. It went down and then went back up. It went down and then went back up. And then it kind of continued doing that to a certain degree. It finally does change because once we go to day 4 over here, you can see this piece here. You'll see here from this POV, you'll see it opened up over here. There was no massive dip for a massive up piece, but it's still going up, right? We are in visually an uptrend. So if we even go back to this, it opened here. Logic does say that, hey, if we are in an uptrend, then technically wherever the open is currently, your close is going to be higher than this as long as it's, still an uptrend. And it closed on an uptrend. Very much, not too much, but it still did that. So regardless of no big dip, regardless, it's still in an uptrend. So it's still the logic of, like, let's say you're trading this day. My strategy, anyone's strategy, I don't care. Find a call. Don't try to find a put saying like the market's gonna fall, I'm gonna make money with it going towards the downside, et cetera, et cetera, et cetera. Oh, there's this zone here, it bounced off this and it went down. Why do that when you could just draw the zone here, it went over, bounced, and it went up, and you're like, cool, there's play, there's money. And then hypothetically, like, I want to hold it longer because we are in an uptrend long term. So hypothetically, if I did buy here and I just held it through and it goes up, maybe I could make some money, right? That's the logic piece that a lot of people are missing. Just because there is a play doesn't mean it's the play that you should take. Trade with the market contextually from a long-term perspective. Dig deeper to say what trade should I be looking for as a result, so that way I can minimize my losses because I'm trading with the market. How can you make a losing call when all it's doing is going up and you buy on the low regardless of where the low is, right? So this is this day. And then we get over here. Whoops, I want to get ahead of myself. This day over here. This one is an interesting one. Opened up over in this spot. No specific fallback, but as you can see, we still went up here, all the way over here. There's no play over here. It's still visually up. So same thing. If you bought a call somewhere, hypothetically, drawing a zone here, comes over, bounces upward, or maybe it bounces up off there, or maybe it bounces up off of there, you made money. Not, okay, well, there's a zone here and looks like I can do puts because it's coming down, or maybe I can do puts and it goes upward to the upside. Buy the dip. You don't have to make it so you buy the piece that it touches on top and it flies upward because you think it's going up higher. You're buying the high, hoping that it dips into the high again and bounces up. That can work. That's perfectly fine. I do those trades all the time. But I want the path of least resistance because, again, if we go back here, I don't know where we are, maybe here or something. I have no clue. But if it's all uptrending and it's all doing these big old wicks coming down, etc., and it's just going up, seems like I should buy the dip because that's just a common pattern. It is what it is. We go back. Let's go to the next day. This is, what's the FOMC stuff? No, not yet. So this one did an interesting thing. Went sideways, went up a little bit finally. There was a play here for a put, FY, but that's just something I covered with some students. Massive fall. What does massive fall mean? It means massive back up. So it did the big old drop, started getting some candles going up, and started going up. So you got the low here, came over, bounced on top, went up. And what is it? Started over here, ended up higher over here, right? Because we're in an uptrend. So again, same thing. You don't want to necessarily say, okay, I want to to go like this, then I want it to come back down. If I can draw this, come back down and then bounce on top. Then I can do the play here. You're buying the highest high. Again, buy something down here, you'll make money. Whether it's day trading, swing trading, anything, honestly, it's pretty hard to lose. So we go back further next day. We finally do this. Big old drop. Not a big massive up, but still multiple trading opportunities of it coming up, bouncing on top, boom up, bouncing on top, boom up, bouncing on top, boom up. And that's still perfectly fine. This one was finally the red one here. And you may be like, okay, well, hey, we were in an uptrend. See, I call BS. That's why this thing doesn't work. Well, guys, this one was, what day is this specifically? Tuesday. Yeah, this one's Tuesday. This is when it was going towards this spot here. It's at the all-time high, right? And this little spot, if I'm correct, right here. This is this day. And over here was the highest that the market has ever been in its entire creation, lifetime, etc. Of course, when it goes up to that, everybody and their mom can see it, and it's not going to just run through it just yet. It will, sure, but just not yet. So the fact of it doing a small pullback is perfectly fine. But then it's just a question of when's it going to break through and when can I just buy the dip? Because you can still buy the dip and just run it anyway, as I just showed down here. So we go to the next day. This is when the whole, if you know, the old FMC meeting happened, basically. So went all sideways, couple put plays, whatever. Did a decent, pretty massive drop at the time anyway, excluding the 1 p.m. FOMC meeting. Then it rocketed up. Big old dip, big old upside. And then it did at the time opened up for FOMC at 1 p.m. 1 p.m. CST, shot up for the new all-time high, showing proof that the zone, well, I'm not going to get into those zones, that the all-time high is specifically no longer the all-time high. At the time it went, this is this candle here, it shot up to here, and then it came back down, basically. And then it started going back downward in that scenario because of FOMC. So, still, the dip to the up is perfectly fine. And I'd argue, let's go back over here. Let's say you saw this. This was going very slow because everyone was looking for FOMC. Let's say you did buy a call here somehow, some way, just because you thought that it was going to be going up massively. If you bought here, anywhere in here, and somehow you didn't sell before FOMC, you probably would, if you know about it, you would have sold in profit. You would have never been in a loss if you bought the actual dip after multiple candles. If you didn't, and your first 5-minute candle went down almost for basically your break even, almost a loss, and then shot up this high, you'd be up over damn near 200+% realistically. You would have sold it. You can't tell me I'm holding it. If you are, you're insane. More than likely, you're going to sell it. You're going to be panicked and freaking out and scared and everything else. You're going to sell it here. This is fine. And if you didn't, boom, 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 you would have sold it here. You would have sold it at some point. This is moving too fast. So think about this. The thing opened from 563 and shot up to 570, no, 568. That's a huge jump. So again, I'd argue this day is still fine, and it's still technically visually an uptrend. This is great. Next day, we have this day here, which is the day after. Let's make sure. Yep, this is the day after when everything, since again, FY, it broke for the new high, and of course, overnight, it shot up from this spot down here at 561 all the way up to 571 in that specific spot. Went down and went back up. At this point, whether you bought the dip, didn't buy the dip, didn't do something, does not matter. You know the market's going in an uptrend. You just need to find calls. We don't need, as mentioned before 1,000 times, you to draw a line here, and then it comes up, and you're like, okay, I want to buy this piece here, and look, it failed. We need you to, if I finalize the zone, do something like this. Boom, comes around, comes down, boom, taps it, starts running up, and look, it's at 10.05. If you would have held it for however long you wanted to, potentially from the bottom to the top, if not a little small breakout, because you're saying, hey, it's going to all-time highs anyway, then you can sell it here, doesn't matter. You would have made money because you're buying the dip based off of the zone. You can play with these things regardless. And then finally, this was today. Today went down for a massive down piece that I've already talked about, multiple red candles back to back to back. And you're probably tired of me saying it at this point, but look, it just went up. It did a massive down again, and then it went up. And then visually, you're wondering, why did it go down again? Why was there two plays? Well, I mean, to be honest, it basically did, as I talked about in my other videos. I can't get my circle. There. We had a high at the time. We had a low. We have a high, higher than this one. So, of course, we had a low that's higher than that one. And we have a higher high up here. So even if, hypothetically, you miss this, and you could conceptually understand, depending on your strategy, say, again, it's not mine, you can conceptually understand that things do the pullback of the dips because it has to follow this exact kind of formula, then you're okay with the fact of it doing this dip. You could potentially, not with my strategy, but potentially buy because you know it's going back up. It's not that complicated, guys. It's not that complicated. So if this is where this is currently, at the moment, we are visually in an uptrend. So if we are visually in an uptrend, the only thing you should be looking for is the same thing I should be looking for, which is calls. Nothing more, nothing less. And it needs to be based off of a potential dip, regardless of what your strategy is. So hopefully y'all can make some money. I should get past 6 figures, I guess, by the end of the month. If not, probably by the next 2 days or so, probably by Tuesday, from trading SPY specifically with options with my specific strategy, because everything's just doing this and everything, the zones act as magnets. It just makes it very simplistic, easygoing, etc. You buy my typical 100 contracts that you all seen with my strategy, but I'll pass 6 figures and I'll be over there with you. Hopefully you all can do the same thing. If not, make a small amount of it from not getting so overwhelmed of the details of how to do trading, but be underwhelmed of how simplistic from a visual perspective you need to analyze the smallest amount of information so you can make a win based off of shit like it's a low, it's high, oh my god, it dipped, I guess I can get in, and then you make a winning trade. Do simple stuff like that so you can make it work. Don't overcomplicate it and make yourself lose a bunch of money. That's how I made my 75K. Or sorry, I guess 6 figures. I can forecast that. But yeah.